Hey guys, what's good? I'm Andre and today I want to go over supply and demand with you guys, and I want to create a new tutorial on it. After the last one that I've done, I received a few comments from you guys as well as a little bit of feedback with regards to what could have been made a bit clearer. So I want to do that. We're going to look at NatGas and we're also going to look at Bitcoin to solidify the information on a couple of different charts. Obviously, if you guys have any questions, please leave them in the comment section below. And guys, thank you so much for all of your support recently. Being a small channel, every single like that you guys give me truly helps spread the word out with regards to my content, and it's been helping me tremendously. Guys, what I want to start with here is our Patreon. We post a ton of really good free content that you guys shouldn't miss on, and we obviously post a lot of really great content for our paid tiers as well. You guys have been missing out on a ton of profits that we've been taking recently, and we still have that $5 tier that is going to probably be sunset within the month here. So if you guys want a very affordable way of testing out our service and seeing if it's something that aligns with your trading and taking some profits, you're going to see a positive ROI on that $5 payment within the week or a couple of weeks. So give it a shot, guys, and stop missing out on some of the profits that we're taking. Now, moving back into the chart here, guys, we're going to start with what time frames to use, how to identify a zone. We're going to try to understand risk. We're going to look at where and when does supply and demand work, how to trade it, and then how to grade it, because it's really important that we only take the best setups we can possibly find. And then we're going to wrap it up by making sure that we look at Bitcoin as well and just applying the same principles so that we can solidify the information. Now let's get started, guys. What time frame should we be using? Obviously, if you're looking at the 1 minute time frame, it's a lot more likely to have false signals than a monthly one or a weekly one. So with that in mind, we always start with the bigger ones. You need to identify what type of trader you are. If you're a swing trader like myself, I usually look at the 1 week, 1 day, sometimes 4 hours, and sometimes 1 hour. I don't go below that, guys, and I wouldn't recommend going below to any swing trader unless you're really trying to get the absolute top of a move or the absolute bottom of a move when you're taking profit or entering or whatever. But I wouldn't recommend it regardless, honestly. So with that in mind, I want to start here with the weekly time frame and look at how we can identify a zone. First off, we will want to look for what we call extended range candles. Now, every single time we leave a zone, and you guys are going to notice that I have a zone drawn in here on the weekly that's graded with 9. We're going to look at what that means a bit later. And as you guys can see, we have some really massive candles leaving this zone. Just compare how big these candles are, for instance, with how small some of these candles from over here are. And that's what we are looking for, guys. We're looking for really big candles because that means that there was a ton of selling pressure here. And whenever we come back in here, we want to make sure that we are contributing to that selling pressure and kind of riding with the trend once we rebounds off of that section. Now, how do we actually identify a zone? First off, what you want to be looking for is just the following pattern. We need to make sure that we have either a rally base drop or a rally base rally, or the other couple of versions, obviously, drop base drop and drop base rally. What's really important with these basing formations is that we are looking for a couple of candles, 3 maximum. We don't want to have kind of a stair pattern and then we drop, or a stair pattern and then we eventually rally. We want to have, as you guys can see here, a single candle or 2 to 3 at max. So we're gonna look at that a bit later to understand it a bit more in depth, guys. But in the meantime, I want to look at how we drew this zone, because this is also going to be giving us the risk. So I'm gonna zoom in here, guys, so you can understand me as thoroughly as possible. We have this zone drawn in here, and as you guys can see, I've drawn it from the bottom end of the week to the very top end of the top week. Now, the reason I did this is because this is the entire zone as you can draw it. And if you draw it this way, and this is really important for you to identify, understand, and then set as your own risk tolerance moving forward indefinitely, because if you keep changing from one style to another, you're gonna end up losing more often than you make profits. So guys, what this means is that we're going to enter a position here at roughly 6.23 as soon as we touch this bottom wick, and then our stop loss is gonna be at the very end of this range over here at 7.126. This obviously constitutes a ton of risk. It's a very wide gap that if the stock would, or in this case if NatGas would move this much against you, you're gonna be in quite a bit of pain until you get stopped out eventually, or until you see the move starting to move in your direction. So that's why it's really important to understand that this is the maximum amount of risk you can take. Now, less amount of risk, so kind of a medium amount of risk you can take would be to start drawing your zone from the body of the candle. And please understand that there is no good way or bad way to do this, and you just need to understand that once you start doing it one way, you need to stick to it, even if sometimes that will mean that some different assets will rally up until here and move without you because your entry position was at the bottom of the candle. That happens, guys. You need to understand that, and you need to stick to your principles, otherwise you're gonna be in pain. Now, the least amount of risk you could take would be to just aim for the top wick in this case. So our entry will be over here at the top of the body of the candle, and our stop would be at the top of the wick. Now, as you can imagine, this is the least risk we can take, but more often than not, the market is actually gonna go without us. So you also need to understand this aspect. Obviously, with risk comes reward and vice versa. So with that in mind, guys, we now know how to draw a zone. We also know how to understand the risk. So I want to understand, where does supply and demand actually work? Now, if you think about it, how can we quantify the value of NatGas, of Bitcoin, of NASDAQ 100? It's by, well, the last one is a bit different here, obviously, but for some of the commodities, the Forex, the cryptocurrencies, we have a supply and demand balance that dictates price. That's what happens every single day that moves the prices higher or lower. And so this is where these work the best. If you go into stocks, for instance, sure, you could look at supply and demand zones to identify interesting potential areas where the stock could bounce. And here's an example for AMD, for instance. We had this rally into here. We created this zone. I want you guys to direct your attention here. And we created this zone, and as soon as the price hit this zone, it fell once more. So it can work with stocks as well, guys, but what you need to understand is that stocks have a fundamental intrinsic value associated with them. And so, for instance, if you have a zone created at, say, $30 for AMD, the likelihood for AMD to reach $30 again is a lot lower, because AMD is a very powerful stock that has really great fundamentals, and people are running discounted cash flows on it and judging how much it's worth that way. So in turn, supply and demand concepts are a lot less valuable and a lot less reliable for stocks. But for commodities and Forex and cryptocurrencies, etc., that don't necessarily have an intrinsic value, we can use supply and demand a lot more successfully. Now, how do we actually trade it, guys? I've moved back to the daily here, and you guys know, if you've been following my channel for any amount of time, you guys know that we had a zone drawn in here. Obviously, this was confluence with our bottom trend line here, the yellow one that I'm kind of playing with here. And as soon as price kind of found support here at roughly 2.2, we entered a long position, and we were saying that we're probably going to be breaking out here, retesting and moving up. And this played out beautifully. We took a lot of profits on this trade. So this is kind of how we're using it, right? Now, you could argue that we are now, and I would argue actually, that we are now again in a supply zone over here. It's not a very strong supply zone, and we're gonna look at why in a second, but you guys can see that we have reached here and we are already stalling out. We stalled out the first time on the very first day that it reached here. Then we stalled out again nearer to the top here, and today we're moving a bit lower. I still think that this is not the strongest zone that we can possibly kind of get rejected by. This is probably a lot more powerful than the one that we're in currently. So with that in mind, I think there's still upside for NatGas here, but I wanted to show you guys how you could use this for profit taking as well, because we have exited our position here. We simply had too much profit to kind of worry about a move further up. We just took what we had, and we're gonna relax and watch this play out and not feel nerve-wracked in case it moves back to the downside before a further move up. As I was explaining a few days ago, NatGas had a massive move up of roughly 8% the other day, so we just didn't want to risk anything, so we took profits. Now, how do we grade it? If you guys have been paying attention, you've seen that I have these kind of little notes on the chart grading some of these supply and demand zones. So let's look at a fresh one. Actually, I had an 8 daily here, but let's look at a fresh one. I'm gonna look at this one. So if we look at this one, guys, we have a spreadsheet here that helps us grade it, and this is the work of Frank Miller. There's a book out there if you want to buy it. Feel free to, it's a really great book. But if you want access to this spreadsheet, again, go to our Patreon. The $15 a month tier gives you access to this spreadsheet. Feel free to ask me for it, and I'm gonna forward it to you after you get on Patreon. But let's look at how we grade it, guys, because we can grade it by the kind of look of the chart. We have a first enhancer here, which looks at strongest, strong, or weak. And this refers to how fast the price moved away from the area. And I would probably judge this as a strong, because we had an initial ERC over here, this big candle that covered a lot of ground, and then we kind of moved a bit sideways. We had another bigger candle, another pretty decent one, and then a move up. So I would probably judge this as a strong. Now the second enhancer would be time at the zone. So time at the zone was really fantastic because we had the zone created by literally a single candle here, so that's 2. Zone freshness. Zone freshness refers to whether or not this was retested before the move down. And in this case, it wasn't. Let me give you a counter example. If we look at this zone over here, and if you guys look at this candle over here that wicked right into that zone, now this zone wouldn't be as fresh anymore because it was already tested once. In our case here, the zone hasn't been tested yet, so it's fresh. Now the last quantifier that we have is the risk reward ratio. The risk reward ratio refers to where is the first demand zone that we have on the bottom side, and I would probably judge this consolidation as the first demand zone. I'm gonna draw it something along the lines of this, and then we simply take a short position from here. As we were discussing, our stop is gonna be right above this area over here, and our take profit is gonna be right at the demand zone below. So our risk to reward is 1.5 roughly, which isn't great. So I'm gonna tweak it to that, and we can see that our zone has a score of 6. Guys, I would not look to play any zone that has a score of less than 7. So with that in mind, I'm gonna grade this as 6 daily just so I can remember for later, and I'm gonna move on with my analysis. I usually do this on the weekly, on the daily, and then I simply wait for price to reach the certain levels that I'm looking at. Now obviously this is a 9 weekly, so this is gonna be the next level that I'm gonna get really excited about. But in the meantime, obviously we have other principles of supply and demand, or trend lines, or different things that we can look at to take trades. Now let's apply the same exact principles to Bitcoin, guys, and see what we've learned so far and what we can do about it. So I'm gonna move out to the daily here. If you've been watching my channel recently, you know that I've been speaking about this head and shoulder formation and the measurement of this head and shoulder formation roughly to the $24,000 area over here. I still think we're gonna go there, and as a matter of fact, there's a demand zone formed over here, if you guys look at it, that we just bounced off of. So this is why supply and demand trading is so beautiful, guys, because it works. Just check out how beautifully these candles dipped into our supply zone over here until they went to the upside, forming what, roughly $2,000 upside in this one single leg of the trade. Guys, I want to look at this on the weekly first. as I usually do. So we're gonna zoom out here. We can see that on the left hand side here, there's a consolidation zone here, which also quantifies as a supply demand zone. So in this case, this would be a supply zone. And again, just look at how beautifully we got rejected from this area. We have an extremely important zone in here at roughly, let's see, I have this, let's move it out of the way, at roughly $44,000. So there's a good ways to go up until that point if we ever reach it again. Not here to judge that, of course. But right now, other than these couple of zones, for instance, this wouldn't be a zone, guys. Just look at the staircase pattern here. We went up, down, down. This is not a zone that I would be looking at all. And as a matter of fact, I don't love this zone either. I guess you could draw it something along the lines of this, but then if we look here, guys, we spent so much time at that zone that I wouldn't be able to give it much in terms of points at all. So I would be saying that this is gonna end up being a pretty weak zone, and we are likely to blow through it quite fast if and when we get there. Now, moving back to the daily, guys, I think we're gonna have a couple of really beautiful setups here, and as you can see, this is the most beautiful one. So let's quantify it, guys. Let me blow this up a bit more so you can see this candle a bit better. As you guys can see, we have a single red candle here, and we blast off the very next day. So we're gonna give it a 2 because we left the zone really in a very strong way with 3 consecutive really huge candles. Then we spent very little time at that zone. It's a fresh one, we haven't eaten off of it, and I'm gonna say that straight out it's more than a 1 to 3 risk to reward, because this is so far off that if we reach it, we're gonna have a lot of space to the upside. So once we reach this zone, this is gonna be a tremendously powerful one at roughly $20,000. So I'm gonna give this one a 9 daily, and just remember it. Guys, I know this video was a bit long. Thank you so much for sticking with it so far. If you want our advice and our tips, tricks, our trades, everything, check out our Patreon. You can test it out for $5. The $15 tier is a very decent offering where our traders make at least roughly $500 a week. Our $49.99 tier brings roughly $2,500 for our traders every single month. So check us out, guys. Looking forward to have you on Patreon. Thanks so much for being here. Like and subscribe, and I'll catch you next time. Take care.